Hey, welcome guys to 11th episode of the blockchain series. Today's video is very special because we will be discussing about policy. There has been many discussions about how to regulate the cryptocurrency market, but all of them has been in vain. But some countries have put some uh, conditions in place, some legal policies in place to regulate it. For example, many countries have recognized Bitcoin as a digital asset, and some countries have said it, like in India, it's regarded as a security, like a stock market security, and it will be taxed 30% as per the normal, as the taxes are applicable. And yeah, there are special and specific conditions, and but for many countries it's still a confusion that in which category of financial instrument this cryptocurrency or these tradings that are happening should be placed in. I have gathered information, I read through some research, and I have made my own generic conclusion because I am also a risk taker. I invest in, means I put my money in VECHAIN, and I have a separate playlist where each day I share my portfolio for it's open, like my return on investment I am expecting to be double, and yeah, that is the playlist is all about. Okay, without further ado, let's begin. In today's discussion, yeah, it's going to be a little bit lengthy, but this video is not for everyone, because people who are interested, because the jobs in policy and they're high paying jobs, and we have to really understand how and what the situation is in the crypto market. But for many it will be boring, and people may not like it, so I leave that to the viewers to decide whether they want to go through or know everything or not. Okay, the first question: why we need to discuss about policy? In current scenario, everything is uncertain. There is no certain regulation in place, because if there is a dispute in the world of crypto, then whose door I have to knock, what legal action I have to take. So it's pretty scary. But though it's being highly secured environment, so the events are very less, or the misfortune events are very less, or the accidents are less. But still, then currently there are large opinions, and it exists regarding the classification and regulation of cryptocurrency. Well, with large opinions comes large means many discussions and many perceptions. Well, there has to be some standardized policy in place to streamline all those things. Well, the importance of policy is that it provides a guidance. Provides consistency, accountability, efficiency, and clarity on how cryptocurrency operates. Means policy provides us with the weapons we need to understand. This offers cooperatives guidelines and principles to follow. That is very true. From the legal perspective, some suggest that cryptocurrency are investments and are too speculative. That's true, because I also earn profit from the speculation. In Bitfavo, Bitfavo is a online environment which I use. Please go to my playlist, and please click on the link that I have given. Well, I use the Bitfavo account because the ideal transaction feature. So they refer it as a digital asset. Well, what do one means a digital asset? Well, in general, it is a valuable piece of content in digital form. For example, any digital currency, or like many things, or digital document. Well, this includes assets that are created digitally, as well as those created offline and later stored on a server. So anything that is online is a digital asset. Okay. Well, the definition as per Google for the digital asset in world of crypto is that digital assets are digital representation of values. Very important to understand. It's a digital representation of values that are not issued or guaranteed by a central bank or a public authority. Means any legal body doesn't recognize these digital assets are of any legal entity and do not have legal status or currency of money. That's true. Bitcoin doesn't have a legal status of currency or money. Even El Salvador, which approved Bitcoin for transaction, but it has never accepted it as or never given any legal status of currency or money. This could be because Bitcoin doesn't have a legal status of currency in any country. In the Wikipedia of the legality status of the cryptocurrency, in this Wikipedia, it's a nice overview of all the countries and what status does Bitcoin has. So I leave that to the viewers for the reference. Okay, so policy is important. We need to know about policy because it gives certain weapons as a guideline for efficiency and clarity. Okay, before we start diving into discussion of cryptocurrency is good or bad, before we are judging it, let's understand in detail the attributes. Means what kind of tool, what kind of instrument it is, what kind of what kind of thing it is. So what are its features? Well, Bitcoin or any other cryptocurrency are traded digitally. It's true, they're traded digitally and could be assessed or could be anyone can have an access from anywhere in the world. It involves security features. Yeah, there are layers of blockchains, and blockchains are highly secure because it is decentralized, and no means any hacker needs to have 51% of the computational power in the proof of work consensus algorithm to do some mischief in that environment, which is very long shot. Um, excuse me. It is highly secured and to protect the transfer between the parties. This is one of the. We know that Bitcoin is used for transactions. Then these items could be assessed from any foreign countries, and that is also a difficulty. It's that is the complexity part also because each country has their own laws. So hence it is prudent to look at regulations governing the exchange securities. Yes. So for example, Binance is an exchange security and we and Binance operates in many countries. So if some legal uh, bindings are associated or some things legal provisions are associated with Binance or any other security exchange security, then that will same be communicated to the users to determine what regulations are applicable to cryptocurrency. Means if we attack the exchange, cryptocurrency exchange, then indirectly we are attacking the users also, and they will abide by those rules. Well, then the government has thought about the same, and they have been targeting the cryptocurrency exchanges. And as a result, what has happened is that now in each cryptocurrency exchange, it is necessary for a user to give a legal identity proof. Like for example, in Bitbabu, I have to take a snapshot of my resident permit, and we have to also disclose, because in Netherlands I have to disclose my all the cryptocurrency investment for tax purposes. So this is the action that has happened because the government bodies are targeting the cryptocurrency exchanges. Well, I know people that who are registered with Binance and they don't have any KPI, and they're enjoying. They don't have to pay tax, or yeah, it's anonymous. Their identities are anonymous. But slowly, government is trying to regulate it somehow, but they are not successful enough. Okay, nevertheless, history has set a precedent for black market that creates more dangerous products where tough regulations are in place. Imagine that all the crypto exchange securities are regulated. Still, then people are intelligent enough to find a technique where they can bypass everything. For example, when alcohol was outlawed during prohibition or some bans were applicable to it, uh, Individuals restored to producing more dangerous alcohol, such as moonshine, and those were distributed to people through very illegal means. Then, however, regulations to be in place because new cryptocurrency are diversifying into many new Ponzi schemes. I agree that although it's a very beautiful idea and it is already now getting slowly more popular, like in Russian-Ukraine war, crypto Bitcoin has been playing a major role because nowadays we have Bitcoin or cryptocurrency wallets or the Visa debit cards, and though government banned any donation centralized any donation from outside world to Russian or Ukraine citizens in their bank account or transfers, but through cryptocurrencies, people are able to get some money or some donations from the outside world, and they are somehow trying to manage or flee from the country or book there or buy groceries or many things. So indirectly, cryptocurrencies have really helped during this war, and it has many good benefits. But still, then every good has a dark side also. So now there are many scams that are happening, like in the world of cryptocurrency. They're like Ponzi schemes, where many companies are coming up with many meme coins, and they are trying to get hold of people through promotion. And when people are investing, they're running away with the money. There's suddenly the cryptocurrency exchange is gone, and the new token is gone from the exchange, and the money is also gone. These schemes are aided by the lack of required disclosure and oversight by the government, and increase the risk of consumers losing money. This is true. There are many there are certain cases which have already happened. 2 billion gone, and people have run away with the money, and the whole security exchange online app is gone. Something that has happened. So I also think that yes, some regulations should be in place, but we shouldn't destroy the beauty of the decentralized concept. Okay, now coming to the current state of affairs. So what is happening in the current world, and how government is trying to regulate? What is happening where? Well, taking the scenario of US government, which is where it's the mining capital of the world now, Bitcoin mining capital of the world, where the three main US government entities like IRS, CFTC, and SEC. These are the main three government bodies which have taken the responsibility of implementing some policies on this cryptocurrency world. Well, as per the IRS, has been unable to decide whether a cryptocurrency is equivalent to foreign currency or a commodity. They are still in the confusion stage. So we move away from IRS. Cryptocurrency has been deemed as a commodity by CFTC. Please, viewers, go through more articles about this. There are really good, exciting notions or information about it, or how they come to a conclusion that it is a commodity. And though it has been declared as a commodity, so they would hold jurisdiction over claims of wrongdoing regarding fraudulent trade practices or market manipulation, as per CFTC 2018. And that this document reference I have given in the reference at the end. Coming to SEC, this guy is a professor also in MIT, as well as as well as he's a very renowned person in US, and he's the SEC, one of the main guy in SEC also. And the SEC is inconclusive about cryptocurrency to a great extent. So even they are also still in the phase of studying it, knowing it better, and trying to find what kind of financial instrument is applicable to cryptocurrency, whether it can be an asset, whether it can be uh, a security, or whether it can be what it can be. The Financial Accounting Standards Board (FASB) should recognize cryptocurrency as an asset because it represents a probable economic benefit in a particular entity that has resulted from a past transaction. Well, FASB has regarded cryptocurrency as an asset. So And the argument that they give, that it is an asset because it represents a probable economic benefit for a particular entity. Means for me, if I gain profit, then yeah, it should be considered an asset because I have that something that brings me gain. That's why they have classified it as an asset. Okay, coming to the discussion part. In current state of cryptocurrency classification regulation, cryptocurrencies are could be classified as a cash equivalent. Well, discussion doesn't give any definite conclusion, but it gives perspective. Well, cryptocurrency in some research paper by Ribon and Siftanides, they have regarded cryptocurrency as a cash equivalent. And why they have regarded it as? Because it could be easily converted into equivalent value of fiat currencies. For example, one Bitcoin is equivalent to some eight, 40,000 $39,000 equivalent. So it could be regarded as a cash equivalent. Easily transferable like bonds. Yeah, it is true. It is easy to store in a digital wallet. That's true. So these three features make a cryptocurrency as a cash equivalent. But these are the discussions in support of cash equivalent, but as a against of a cash equivalent, that cash equivalent, if it is so if an financial instrument is cash equivalent, but then it has to be stable. If there is high volatility, then it rejects the notion of cryptocurrency can readily be converted into quantities of cash, because if the high volatility today, in 1 minute it is 30,000, in the next moment it is 32,000. So it's highly volatile, and highly volatile rejects cannot be fit to a financial instrument which is regarded as a cash equivalent. It becomes less impactful. If there is high volatility, the purchasing power also diminishes. So that's why in the research paper of Ribon and Siv, they concluded that through the discussion that cryptocurrencies may not be considered as a cash equivalent. Well, in many research papers, the discussion is that they are giving first they are giving a classification, then they are discussing about pros and cons, then they're coming to a conclusion. So cryptocurrencies would not be a cash equivalent, and that is what I think also, because tomorrow if India legalizes Bitcoin as as a legal certificate, a legal way of transaction, then tomorrow if I owning two Bitcoin, then tomorrow two Bitcoin equivalent is to $78,000, but after 2 months it becomes 50,000. So my salary got reduced. My salary is not going to be three Bitcoins. Yeah, it should be two. It will be two Bitcoins for a particular period of 1 year. So this high volatility diminishes its characterization of cash equivalent. Okay, then some research papers said or classified cryptocurrency as an investment. But is it an investment? Let's discuss. According to Deloitte, cryptocurrency should be classified as an investment so long as the company intends to treat as an investment. So, for example, if a company knowingly puts its money in crypto world and declares that they have invested in it, then it can be considered as an investment. So the company has to make it public. It is due to the fact that if the investment company wishes to hold ETH or Ethereum for a long term for price appreciation, then it's a long term investment. Very important to understand. It is some similar to stocks, like for example, Apple is holding some stocks of Microsoft. Then if it is a long term, then it can be shown on their balance sheet as an investment. And the company, if it makes public, then they have to, obviously they have to pay tax on the profit, and the investment tax laws, or stock investment tax laws will be applicable in that scenario. Gains or losses from the fair value adjustment would be reflected in company's net income. That's true. That's very true. Okay. However, the cryptocurrencies do not fit with the conventional definition of an investment. So this is the negative point. It's because investments are typically represented as a right to a real world asset. Very important to understand. Investments are typically represented to a right to a real world asset, something that cryptocurrency do not possess because they are virtual, they are digital assets. For example, an equity stock represents an ownership to a stake in a business. A bond represents right to receive interest payments from another company, and a land is classified as an investment that represents a right to control the land. So these are the investment attributes, and cryptocurrency do not possess these attributes. For example, a land classified as an investment represents a right to control. We cannot control crypto world because it's a decentralized. A bond represents right to receive interest payments from another company. A right to receive. Cryptocurrency world do not promise right to receive interest payments. Well, some of the exchanges have to promote their company. They have put a PYE of like 150%, 100%, but it doesn't mean that it's a right to receive interest payments. Then, for example, an equity stock represents an ownership stake in a business. Ownership. No one can be an owner of the Bitcoin. That is their funder. That is decentralized. So, nullifying all the attributes of an investment, at the end, I can also consider, or I can also means I may come to a conclusion that Bitcoin is not an investment because it doesn't has features of an investment. Okay, uh, moving forward. Considering the odds, FASB should provide management the freedom to classify cryptocurrencies and investment. So at the end, it was said that in the research paper that if a company knowingly declares with a statement that it has invested in cryptocurrency as an investment, if the company declares that, if a firm declares that, then it could be classified as an investment for that company, not for all the companies. And accordingly, the tax laws will be applicable if there is a profit. This is fun. Policy is a fun. Even I would like to make my career. I am a blockchain curious guy. I would like to make my career in policy also. This is really fun. And I can understand the dilemma also because it is very hard to comprehend how the things will fit in because there are pros as well as there are cons. Okay, moving forward, cryptocurrency sorry cryptocurrencies cannot be classified as an inventory. Okay, what are the pros and cons? By definition, inventory is the aggregate of those items which are tangible personal property, and a Bitcoin or any cryptocurrency is not a tangible personal property. So, it cannot be regarded as an inventory, or it cannot be given a financial instrument name called inventory. So, cryptocurrency could not be classified as an intangible asset. So could be classified as an intangible asset due to the fact that it is an asset that can be identified as carrying a value. It is not cash. It doesn't has a physical existence. That's true. So it could be considered as an intangible asset. The Internal Revenue Service in US considers cryptocurrency as property for tax purposes. So as I said earlier, each legal entity or each governing body has their own definition of cryptocurrency. There is no standardized way, but I think there should be something standardized so that it is easily adaptable for small countries, big countries, developing countries, and developed countries. Uh, this would mean that gains in the sale of cryptocurrency would be taxed in some manners because in India, yeah, they have just all the government bodies have voted for, because of these confusing definitions. They have just unanimously voted for cryptocurrency as a security asset. I mean, as a stock asset, and if it is traded, then there will be 30% tax on the profit. Okay, and similarly, many of the countries are doing so. Concluding, it's a never-ending discussion, but lack of concrete classification could lead to more room for debate. But in current state of affairs, countries have consented towards considering crypto trading exchanges to be traded with same standards as securities exchanges. So at then what the countries have done is that they have targeted the cryptocurrency exchanges, and they have classified the cryptocurrency exchanges as security exchanges, and accordingly the cryptocurrency exchanges are being taxed. And though the cryptocurrency exchanges are taxed, they are taxing exchanges are taxing us as in terms of fee. So at the end, I leave it to the viewers to further decide and make their understanding clear. Because for me, I would say that it's an intangible asset. It's a risk. For me, it's not an investment. Also, in my other playlist where I disclose my portfolio every day to the viewers, I have invested on 1100 euros. I say my VECHAIN, for the money that I invested for VECHAIN is a risk. It's not an investment. Okay, coming to some more examples. Well, many other public companies have their own version of cryptocurrency. For example, MicroStrategy CEO Michael Slayer is a famous guy. Has classified Bitcoin as a reserve asset and now holds 124,391 Bitcoins. Tesla considers Bitcoin as an investment, and here they consider as a reserve asset. Michael Slayer. A company called Galaxy Digital Holdings, they consider cryptocurrencies as trading investment. Voyager Digital Limited, they consider it as a trading digital asset. Block Inc., consider it as an institutional investment. Marathon Digital Holdings Inc., they consider it as a corporate treasury. Hot 8 Mining, Corp, they consider it as a tool. And Bitcoin Group SE, they consider it as a safe reserve to crypto bank. So every or many company, thousands of companies have their own version of defining the cryptocurrency, and showing their portfolio as a kind of reserve asset or an investment. So accordingly, the tax laws are applicable to them. So it's very confusing. It's a long debate, and we cannot come to a conclusion in one session. But I hope the viewers enjoyed the discussions. They enjoyed my findings, and they are able to get new ideas or perceptions to move forward with their views of conclusions. Well, the job role is in policy of cryptocurrency world is very good, and one if they're good enough, they can really get paid very high. But it's confusing. It's very amateur. There are people, US, many other countries are trying to crush Bitcoin world, but for me, it's a new world, and I am a blockchain curious guy, and I would love to make my career out of it. So please, viewers, go through the references, and these are very nice references for further information. Well, keep learning, guys. Please like and subscribe. I would really uh, have would like to have some comments or some feedbacks for improving my quality of videos, or my my how should I make the videos, or what is necessary, what other topics that viewers would like to know. This would really gives me some ideas, as well as some direction. With that being said, thank you guys, and have a nice evening, and bye bye from Netherlands. Good day.